As the Wall Street Journal reported on October 2, China Evergrande Group Chairman Su Jiayin, also known as Hui Ka-yen in Cantonese, is being investigated on suspicion of transferring assets offshore while the debt-ridden property developer struggles to complete unfinished projects. In addition, Su Jiayin is under police watch and is suspected of committing unspecified crimes. Earlier, a Platform X user named Asia Finance posted a photo showing the financial status of top Chinese developers. This account found that Evergrande violated more frequently and seriously than the other groups regarding three financial ratios. He added that since 2018, Su Jiayin has been planning his escape by frantically transferring about $14 billion, 100 billion yuan, of assets overseas as dividends and US dollar bonds. According to Asia Finance, in the past 2 years, Su got divorced and continued to transfer assets overseas through the repayment of dollar-denominated debt. This kind of debt is issued at high interest rates and is mainly purchased by Su's family. The purpose is to hollow out Evergrande. He applied for bankruptcy protection in the US court, wanting to get rid of all responsibilities through debt restructuring. Since Evergrande has more than $1 billion of cash now on its books, Asia Finance asked, how can it guarantee the handover of the property? How to solve the trillions of debt he left to the related parties and the large number of unfinished buildings? In mainland China, collusion between government and business has long been an open secret, especially in the real estate industry, which has the influence of the Chinese government's powerful elites behind it. The Wall Street Journal states, bailing out developers such as Evergrande was off the table because of fears it would create a moral hazard and lead to more overbuilding. Zhang Tianliang, a U.S.-based history scholar and professor, said that Evergrande is just the beginning, and other companies, such as Country Garden and Sunac, will explode one by one in the future. Scholar Mo Zhishu echoes that such Chinese real estate is essentially a Ponzi scheme, and Evergrande is just a part of the scheme. Su Jiayin's fall was just the beginning of the situation, and everyone would pay a price for it. Japanese investment bank Nomura believes that China's economy will continue to be sluggish or even worsen in the coming months due to the continued deterioration of the property market, weak exports, and weakening confidence of private enterprises. China Evergrande Group wiped out international investors, disrupted financial markets and left thousands of suppliers in the lurch. It also failed to pay households who invested in its wealth management products. Evergrande's wealth unit ran into problems 2 years ago when a cash crunch meant it couldn't make overdue payments on about $5.5 billion, 40 billion yuan, of investment products, sparking protests and prompting the company to offer reduced amounts of cash or discounted real estate instead. As reported by Bloomberg, Zhao was one of those investors. In the past 2 years she had waited for trickling repayments. After urging the police to investigate dozens of times without success, her luck finally turned this month when she received notice that her complaint was acknowledged. To her bigger surprise, police and related authorities in the southern city of Shenzhen said they will work overtime through an 8-day national holiday, which starts on September 29, to deal with leads from tens of thousands of retail investors. She quickly spread the word. Zhao said, "It's been 2 years, and I've almost been driven crazy." For those who chose to get repaid in cash, Evergrande's wealth division initially promised to return 10% installments toward their principal on a quarterly basis. 3 months later, the plan shrank to a monthly payment of $1,100, 8,000 yuan. Almost a year after that, it was dialed back to 2,000 yuan a month, and then to around 500 yuan. For a 100,000 yuan investment, a full repayment at that pace would take almost 17 years. When the latest installment was due on August 31, nothing appeared in consumers' accounts. That day, the money management arm said it couldn't make payments due to a liquidity crunch and setbacks in disposing of assets. Evergrande now has $327 billion in liabilities. In addition to its chairman being held under probe, other officials of the group have experienced the same plight, including former Chief Executive Officer Xia Haijun and former Chief Financial Officer Pan Darong, who both oversaw financing businesses. Su's son Peter Su, who once ran the group's wealth unit, was also taken into custody with Su. News related to Evergrande and Su has attracted a lot of discussion among netizens. Some people initiated a poll, asking, "What sentence do you think Su Jiayin should get?" Netizens speculate that he will be sentenced to at least 15 years in prison. Some say that the specific sentencing will depend on Su Jiayin's performance. Many people comment that Su Jiayin may pass away but won't have the chance to live in his 12 acres of ancestral graves. As for why Evergrande and Su Jiayin collapsed suddenly, netizens try to give different explanations, including in a spiritual way. Some people say that Su Jiayin erected a merit monument in his hometown in Hunan 18 years ago. However, Chinese people have always believed that it is unlucky for a living person to build a monument. The biggest taboo for erecting a monument on a tomb is to write the name of a living person because it will bring bad luck to that individual. Some netizens found that when Su Jiayin returned to his hometown in 2018, he refused to listen to the feng shui master's dissuasion and insisted on dining in the old house. An incomplete couplet behind him read, "The wealth of peonies will eventually come to an end, and the song of the long-lived crane will go down in flames." Now, it has become a prophecy confirming Su Jiayin's ending. Don't forget to comment in the section below to share your opinions on today's topic with us. Make sure to like and subscribe to see more interesting topics from Understand China, and thank you for tuning in.